This is David Patrick, Fitzstock Charts, weekend market analysis. Charts while you sleep, week 30 for July 20th, 2019, and we are in no trend. We've been in no trend, I think, 2 or 3 times this year. We've had 5 good uptrends. We had a downtrend, and we've gotten paid. We've gotten paid in all the trends. The trends sometimes last 7 to 15 trading days, and then we get knocked out of trend. That's what the market does. It doesn't go straight up forever. It doesn't go straight down forever. It moves in waves, and it moves with trends. If you trade the trends with rules of engagement, you make money. Are there going to be better trends based on historical chart pattern comparisons or based on weekly charts? Absolutely. The trends are better when the weekly, the bigger picture, the higher time frame coincides. We're going to get to the bigger picture in a moment. Option expiration, it's always good to get that behind us the week before, the week of, and then we're heading into earnings season. So there's a bunch of event risk coming up. And once again, we don't trade event risk. So do not put on any new position heading into, a couple days before stock releases earnings. We don't take that type of event risk with new positions. Scaled profits rolled into options. We're going to talk about that a little bit because you saw me become leveraged long numerous times this year on the uptrend, sometimes 110, 120, 130, 140% long market exposure with triple long SPXL, TQQQ, UDOT. I use that because I'm aggressive. Some people might want to be 50% long, some people want to be 100% long. I get leveraged long in uptrends. And when we start to get knocked out of trend like we did this week, it's real simple. I don't wait till we go in a downtrend to start building cash. I'm proactive. And a lot of times, or sometimes, I have to get in at higher prices than I got out at because I'm so aggressive. But also, there's also at least 2 times in the last 6 months where the market went significantly lower afterwards and I got dirt cheap levels compared to where I sold. That's how I trade. Some people, that doesn't meet their risk profile, their trading time horizon, they just stay long versus pivotal areas, whether it's the 50-day, the 200-day, or specific Fibonacci's on the chart, which we'll also get to in a moment. But it's very important to trade your own risk profile, your own trading time horizon. Our focus remains our ESFL, comes out every day, engagement spreadsheet focus list. On top of that, my supplemental trades, if you want to ride them, that's fine. They're on Twitter. I post them all the time. I post my positions and the daily updates, my scales. And I'm also day trading the ES, mostly from about 8 a.m. to 11 a.m. Sometimes I put things on in the afternoon, but that's the time frame I trade, and you have to identify what time frame you're going to trade. Let's look at a few things. First of all, 90% Club keeps ripping. We have 141 different, I don't even think we've had 141 trading days this year. So you have basically an option that doubled for every trading day we had and then some. Absolutely amazing. 38 triplers, 1,084 doublers since we launched the service. Year to date, 270 different options that are engaged from our focus list, 2 no scales, 24 losers, 244 winners. We're batting 900, 90% winning, which is absolutely unheard of in the industry. Before we get to the weekly, we're going to look at this 2012 historical chart pattern comparison I have on the left, and this is the SPX right here. Will this pattern diverge? Yes, at some point it will. It might diverge next week, it might diverge Monday, it might diverge later in the year. I don't know, but until it diverges, and we'll know it diverges if we go right back below the old breakouts. Let's call it 2950. Below 2950 creates difficult trading. We're still above the rising moving averages, but we're breaking and digging into old resistance, which should have been support. Going back 2012, we never did break that. So if we come and break this, we're probably going to diverge from the pattern. Does that make it bearish if we diverge? No, it's just going to be sloppier. We're going to have to scan, look for other historical chart pattern comparisons, and the market could be a little bit more challenging in the shorter term to trade if we break those levels. I don't know if we're going to break those levels. Currently, we're in no trend. You can see the market is doing absolutely nothing besides, right? I put a highlighted a square here, a square here. It's in this trading range. Until we either break Thursday's low or it looks like Monday's high, you're going to get whipsawed around. So we have a couple mixed indicators. Yes, we have bearish MACD cross. We have price that was below the 10 SMA, and now we're back right at the 10 SMA. But let's look at the weekly to see what that looks like. Let's flip over to here, if I can. Change this guy to that. and see what the weekly looks like. I'm going to have bars up on the weekly, cleaner to see. And let's blow this up. Let's get rid of everything on here. Okay, so here's our 10 SMA, 2909. We're in an uptrend on the weekly until we break 2909. So you could come all the way back down here and still be bullish on a weekly chart. The weekly MACD is the highest level really it's been since 3/5/18, a year and a half ago. We're 18-month highs on MACD. That's nice confirmation. Ideally, what I would say if I had to put odds on what could happen, I would say 60-40 odds that we're going to repeat 2012 with some sort of bull flag above the breakout here. Now, does that have to happen? Absolutely not. 60-40 odds, obviously, 40% of the chances we could break right back down or do other things, maybe trade sideways for a long time. I think the higher probability, meaning let's just call it 60-40, is at some point we're going to rest and rebuild strength, and maybe that's after earnings season, maybe it's the tail end of earnings season, I don't know. If and when that thesis breaks, then we'll reevaluate where we're at. So currently, let's focus on where we're at. Right now, we're in no trend. The MACD is bearish and price is right at the 10 SMA, which is not telling us anything. NASDAQ right at the 10 SMA, MACD bear cross. That's not telling us anything on where we're going in the next few days. Versus an uptrend, we have a bias on the long side. Right now, we don't have a bias. The only bias we have is the weekly time period, which continues to be bullish. So if you're looking at the higher time frame, you're slightly bullish. But the daily is telling you absolutely nothing. And it's really what we're trading is daily and intraday. XLE continues lower. IYT continues really to be, I don't know, let's draw some lines here. I mean, this thing, if we draw here to here, we're still below that downtrend line and right in this type of wedge where usually when you break out of it, if you break out of it this way, usually what happens, okay? Or even digs in even more into the wedge after it breaks out. And then we go higher. What would happen at the same token if it breaks down to the bottom of the wedge? It's the same thing. It could do this. Either way, what is this type of pattern? If you don't know it, go to the website and search the wedge under subscribers, because this is our least favorite pattern to trade. Any type of price constriction into this type of wedge, we do not have a trading edge when we have a wedge. And right now, we don't have a trading wedge on the IYT. Do we have it on the small caps? I mean, you could basically do the same thing. It's in this nice downtrend channel here. And if I drew that line right there, no, that doesn't give us any trading edge at all. What that does, it tells me at some point very soon this summer, I would say in the next couple months, is you're going to see some volatility. You're going to see some sort of big move up or down and then back down or back up. It's going to be a zigzag move. It's usually how you break out of that type of wedging pattern. IBB, what's that telling us? It's the same thing. I mean, so far, we're not getting a trading edge with those vehicles we're looking at. Let's look at the SMH. This is a nice pattern. You could say, oh, this is maybe a cup and handle. I don't know. Either way, this is a bull flag on top of a bull flag on top of a bull flag, and it continues to grind. Now we're filling some gaps up here, so it could stall, but there is that sector strength within the NASDAQ, so that's obviously positive. We look at gold, and we've been bullish gold here for a while, from this bull flag to this bull flag. I think we had Royal Gold or GLD that's in the 90% club, up 200%. It's huge. So gold continues to look bullish, and in my opinion, so do bonds. Continue to grind higher with the 200, with the 50, and just grind higher with prices. Yeah, are they getting knocked out of trend? They're right at the 10 SMA, just like the market. I've been bullish bonds here for a while. I remain bullish bonds. What's going on with the Dow? Because the Dow was showing significantly relative strength, came back to the 10 SMA and held, and right now it's in that trading range too. So as long as we hold above these old highs, let's just call these old highs 2,700, because there they are right there. And that candle's high, 26.95. 26,951. I was looking at the diamonds, I was thinking that. So 26,951, 26,951. That's where support should be. If we come and we break that support and we close, a couple days below that, All that's going to tell us, doesn't mean all of a sudden we become bearish. It tells us the market needs time to heal and give us a trading edge again. And currently, while we're in no trend, while we're in this wedging pattern, I feel we don't have a trading edge. And that is why I'm close to 90% cash. Now, let's get back into what we originally talked about. I was 122% long this week. I scaled my profits at Facebook, scaled my profits in TQQ. Tried putting on UDOW for a day and took it off because it wasn't working. Scaled profits on SPXL. And what did I do when we got back above the 10 SMA on Friday? I put some of those SPXL profits to work for a speculation trade in case we get knocked back into an uptrend. I have some position on where I can get, size on long. And so that's what I have. I have, near 90% cash, 10% SPXL, which gives me 30% long market exposure. If the spider trade works, great. I'm going to exercise them. I'll become 130% long the market, 100% long spiders, 30% long or 30% long market exposure with SPXL. If it doesn't work, guess what? I'm still basically 90% cash, and I give back some of those SPXL profits that are rolling spiders. Ideally, you want to put yourself in a position where you're using the house's money when you're speculating with options. And that's what I did. I put myself in a position where if it works, it works. It doesn't, I'm just giving back a small amount of my profits. So as you know, I'm largely cash. This is the most cash I've had in a while, not because I'm bearish. It's because we are in no trend. Okay, so let's look at some stocks, see what we got going on. Apple elongated nothing. I don't even think that's a bull flag at this point. It was a bull flag here, here, and here. This is just price being boring, price restriction, and it's not telling us anything. So we just went from all the indexes basically not telling us anything. We're in no trend to now Apple telling us nothing. Amazon, what's that doing? Broke trend, broke out of that trading range, MACD bear cross. That does not look good in the short term, and that's obviously that can change at any moment. That doesn't look good. Netflix, bear flag below the 200 SMA. That's setting up short. Booking hasn't done anything in a long time. Facebook continues to be a little bit toppy as it gets into this this big, huge gap fill. We know as you get closer to the top, you start back and filling. That's what they call it, back and filling. They grind lower, grind higher, eventually fill the gap. And that's what's going on with Facebook. What about Tesla? Tesla's grinding to this 200 SMA. These new lows did come with MACD. So this is a little bit surprised that we're seeing that. But at the same token, you had your rules to engage here. And you had a bull flag here and here. So if you're using rules of engagement, it makes a lot of sense on what's going on. Trying to rationalize why that stock hit new lows with MACD and is now ripped, 40% higher. You're never going to be able to rationalize that. Google, you got a massive gap here. You had a gap which it filled there. You're going to have a gap lower. Do we have a trading edge on any of these stocks we just talked about? Absolutely not. Not right here on Friday at 2 p.m. We don't. NVIDIA is showing a little bit of strength, really needs to get above there, and then I think you got a little bit of a trading edge with NVIDIA. There's not a lot of momentum there. Intel actually looks pretty good. I think earnings in Intel and Texas Instruments are coming up. We need a sector to lead bad, so let's. That Micron does look good. AMD right back below the 10 SMA. Avgo, OLED, that looks okay. Xilinx continues to grind into this gap, and I do think we get back to 135. Once again, you got earnings season coming. It's hard to predict exactly what's going to happen. Microsoft. So we hit new highs on Friday without MACD, and that's bearish divergence. It would not surprise me what the stock does. You don't have a trading edge, so you can make a huge wedge pattern for this. It could come all the way down the 50 SMA or continue higher. Do we have a trading edge with Microsoft? No. So other than NVIDIA, if it continues higher, we really don't have a trading edge with all the stocks we just talked about. Hence, we're in no trend. Hence, I'm 80 to 85, 90% cash. Oracle, downtrend. This was a leader. We just lost a big leader with Oracle. Adobe's a leader. You got MACD bear cross, getting extremely sloppy. Coop hit new highs with MACD with that 4 or 5 month highs. So Coop, I would not add to Coop, but Coop does look good here. Now broke trend. MACD bear cross. That is setting up short. CRM grinding to no man's land. Workday grinding to no man's land. Splunk was in the 90% club. Still looks pretty decent. Snap, Twitter. Snap looks like a short. Twitter looks like a short. GoDaddy, Wix. They're just stalling. Visa, MasterCard look okay, but they're hitting new highs without MACD. So we got bearish divergence on some of the old leaders. A lot of stocks heading sideways. A lot of MACD bear crosses. There's no upside momentum as of 2 o'clock on Friday. Once again, that could change. BABA, Baidu. What do we do, by the way, when there's no upside momentum? We preserve year-to-date gains. And that is why I'm in a big cash position. Not because I'm bearish. I'm preserving year-to-date gains. We've had 5 uptrends. That's very unusual. And with all these stocks in the 90% club, over 1 per day, that's unheard of also. So usually when you see those kind of returns and those kind of gains, the market slows down and it lets everything catch up, and then trading in the short term can become challenging, which is what we're seeing. VMW, that actually looks pretty good. VIV. So, I mean, we really got like 2 or 3 stocks so far. Box looks lower. What about ICE, CME, SIBO? They're stalling. SIBO still looks okay. Let's look at the banks. JP Morgan. Flip it. JP Morgan, Goldman Sachs. Yeah, I don't think they look bearish. They don't look bullish. They just look like sideways. And as of Friday at 2 p.m., there's no leadership in that sector. COP, PSX. PSX continues to grind higher. ExxonMobil. This whole sector looks sleepy to me. Can it wake up at any point in time? Absolutely. Does it look good right here? No, it looks boring to me. And when things are boring, I don't trade. I don't force on trade. As you can see, my trading account is in cash, and I'm 85 to 9% cash in my longer term accounts because I don't have an edge right here. When I have an edge, you see me all the time become aggressive. Am I aggressive right now? Absolutely not. By the way, that was Guild. And that's a wedge pattern breaking on the downside with MACD confirmation. That does not look good. That looks like a short setup. VRTX. Well, I'm having some serious issues typing. VRTX. Holding the 50 SMA. Have no edge there. Aluminum. Aluminum looks lower. I don't see really any kind of sector leadership. We've talked about this, by the way, when this SPX was breaking new highs. This whole run right here. We talked about the market was breaking new highs and there was no sectors leading besides industrials and NASDAQ. And I said, that's fine. Can the market keep going? Yes. But at some point, we're going to have to see some sector leadership, and we're not seeing that yet. Until that happens, I'm going to stick with my guns. This market's going to be fragile, and it's going to be difficult to trade in the short term until we see sector leadership. We don't have that right now. Docu, what about Lyft and Uber? Uber, not so much. And Lyft actually does look very, very good. And that is an ad. And we talked about this in almost all the videos. Above that price, 66, 64 is an ad. And if you took Uber long anywhere, I'm sorry, Lyft long anywhere, and there you're adding. You're adding on price strength confirmation, which is almost, MACD's almost at an all-time high here. And it looks like you got some gaps here. Looks like you should get to $70 pretty easy. After that, maybe 78 or 80. So this Lyft looks really good. Let's finish up. We're about, 18 minutes in the video. We talked about the higher time frame was bullish. We talked about we're neutral on the daily because we're not in a downtrend yet. And if we're looking at a 5-minute chart, market's all over the map. I mean, if we look at Thursday's action and we dissect our 5-minute rules of engagement, I don't want to ever say easy. Sometimes I've been saying that. I don't want to say that because nothing's ever easy. But if you're dissecting these moves and you're using at least 10 plus candles to draw your trend lines, these are pretty decent moves, right? MACD bull cross, break of a downtrend line, that's a pretty good trade setup. You know, you could do it right here too. MACD bull cross, pretty long trade, pretty good long. You could do it right here, right? That's a pretty good long trade setup. Just using your 5-minute rules of engagement. If you are a counter trend trader, yep, you could short here, and your stop would have been here, so you would have made a little money. You could do the same thing here, do the same thing here, right? And you could have done the same thing here. Are these ever perfect? No. But if you dissect them and you take your time doing it, you don't force trades on, and you, more importantly, you trade the time frame that you are comfortable trading. If you're going to trade 8 a.m. to noon every day Eastern, then trade that. Don't put trades on at 2 and 3 and 4 p.m. Just don't do that. You don't have to trade 24/7. It's never about the quantity. It's always about the quality. I prefer to trade ES 5 in the morning till 11 a.m. I'm not up at 5 in the morning anymore. I used to be, but I'm not anymore. So when if I'm up and after I get the newsletter out at 8 a.m. and I like a S&P futures long or short, I'm going to put a trade on. But it's all going to be based on our rules, and you have our rules. Price above the 10 SMA, we get long when MACD's heading in the right direction. If we see a bullish price formation, a bull flag, WV pattern, cup and handle, those are bullish patterns. If we see those along with the MACD and then the higher time frame agrees, whether it's the daily or the weekly, then we hit it. We hit it hard. Unfortunately, or fortunately, right now, the best way to trade is to day trade because we're in no trend. But I would say even though we're in no trend, this market is still very sloppy. I mean, if you're drawing tight trend lines like here, and you got long here, you didn't see the MACD bull cross, but you did have your rules of engagement, it's not a winning trade. I think you got to draw longer trend lines, and probably you're better off waiting for uptrends to happen, 2 candles above, and no, they're not going to all work out. And I would say still 70 to 80% of them do, 7 out of 10, 8 out of 10 do. And where the S&P futures doing right now, we're grinding to new lows. I mean, and real fast, I posted this the other day. I want to see if we still have this. I think right in here, I said, watch, because we broke this uptrend line. I said, watch, we need to check Globex lows, which was right here. You got to remember, we're in a wedge pattern, which means we can come take out highs and then go take out lows. So what happens? We did a higher, lower, double bottom. We ripped higher. We came up here. We did a double top, and now we're ripping lower. So in no trend, most likely scenario is just go down here and take these out, 27.94, take them out lower, and then probably rip back up higher because that's your no trend. Now, if the opposite happens and we come and break a triple top, then obviously that's pretty bullish. But as we're in no trend, you can't make that type of prediction. You have to assume that most likely we're targeting the downside and they're going to whip right back up. Until a trend happens, you have to assume no trend. Okay, it's going to continue. And right now we're in no trend, and that's going to continue until obviously we go into uptrend or downtrend. So, in summary, I'm in a very, very light long position. I do have some speculative calls on in case we do see some upside momentum next week. If not, I give back a little bit of my SPXL profits. No big deal. Probably if we break this area, I might just go to all cash, get rid of the calls and my SPXL, the rest of those profits, which are pretty huge, if we would come down here. Because then we're talking about breaking lower lows. And at that point, once again, why am I risking year-to-date gains if we're starting to print lower lows? So that is my 2 cents on market technicals. You know all my entries, all my positions, all my scales, all my stops. Trade your own risk profile, your own trading time horizon. Use the ESFL. That's what it's there for you. Have a great weekend.